I was going to take this semester, and the only time I could make it after the semester. Well, I would have 8 a.m. to 9:30 in math, and I have a two, so I can never have a
There's a
rest.
lot of classes that I need to take that are literally only offered certain
I just can't do
and I'm
the
like,
classes.
I'm never gonna graduate.
Like I got
Yeah,
lunch.
they don't even
I have
offer
like
it
a
all,
break for a second.
cause I learned that chemistry program, they don't offer the classes, because we have more chemistry. And you can't
Okay,
choose
let's
where
go
you
ahead and
want.
get class started. Now that all of you got caught up on what each other's doing, Christmas break, and so
We're
forth.
not Facebook, we've been caught up. We never lost touch.
I wanted to do a marketing minor, and all my girl was like, oh, professors in marketing, like, go marketing. And I was like, okay.
I'm surprised
Like,
I
well,
got it.
everything's awful,
Well, I
like, right
told
next to
myself
it,
last
and I'm
night,
like,
because I got
really
it
love
about
the
2, I was
support.
like, I'll spend
I'm like, okay.
I wake up before 5.
She's
My daughter
good,
comes
she's
home.
awesome.
I woke up.
Oh no, she's
I'm
awesome.
afraid. Then I took
And
a shower. Like,
I mean,
I
Carla,
like him because
it's
he's
him.
very
I learned a lot from her in marketing and in all the classes that I've had with her. I've had like 4 classes with her every semester until this one. I have had a class with her.
So I like, so every single day we have to come in and like pitch an idea, pitch a new object, and like make an ad for it, make a design for it.
Okay, on the course syllabus, there's not much to tell, just that, my email address is there, of course, and, if you do have to miss a day, we are live streaming. You know how to go to, Moodle. Have any of you checked into Moodle yet this semester?
You automatically get enrolled in class.
I think you automatically get dumped into Moodle, but they confused it. Like for this class, they had Moodle on there 3 times for this class.
All of my classes were like that.
And I tried to hide the blank one. I think I hid the one that had girls' names in it. Somehow I got it back. But anyway, I put the syllabus on Moodle. You know what we're talking about on Moodle? Have you been on it in your class? Of course, I'll check, make sure those are correct solutions on Moodle. And I put the link on new Moodle to go to Cengage. Now, it may be a different link than what you had last semester, but your code still should work. You have to put in your code, and you got the code on you. So Cengage is where your real homework is. That did help some of you last semester. It's 1 grade out of 5. I counted it 20% of your grade. And that should be explained in here. Now, those folks who are live streaming, you need to please keep up with the assignments, and please email me your assignments. You can upload them in Moodle, but I've not went that route. That'd be Lake and Dunford. Ross Lakin, I forget when you had Principals 1, maybe 2 or 3 years ago. And here is somebody's name that I cannot pronounce. Zayvier. And the last name is Eichelberger. Now, I don't know if that's a German name or what, but I don't know when they had accounting. I wish they would contact me. And Melissa Morrow, I'm glad you're back. She manages one of the local McDonald's. And Christopher, I'm glad you're back, finishing up your accounting sequence. All right, but each lecture, you all should please write me a page of notes and email them to me about the class lecture. And you should do that within 1 or 2 days before the next class. You can't bundle 5 or 6 classes together. And for you all, the syllabus and Cengage and so forth. Now, this one person I don't know. I hope they're able to get on Cengage. But any of you all that are enrolled in the online class, if you need to call me, please do so. Email me, I'll try to answer. And as far as the syllabus goes, you can read it. They're doing things different this semester. You all signed up to be here, but you are, except Marcus. Marcus is supposed to be here. Knowing Marcus, he'll come in about 3 minutes. But I may have him time right and I may not. And knowing Marcus, if he comes in 3 minutes.
Oh, he
Well, how about 1 minute? Anyhow. Marcus, are you playing basketball this semester?
That's Tony.
I mean, Tony. Have you seen Marcus?
I don't know where he
Okay. Tony, let me make sure you're on my roster. Yeah, you're here. I thought Mark was the only one that. Okay, Mark is the only one that hadn't showed up. I still think he'll show up in 3 minutes, which I missed it. Anyhow, so. What's happened to Antonio? Every major has to have the second semester. He's a pretty good student too. All right, so much for the syllabus, so much for getting on Cengage, so much for getting on Moodle. Now the textbook, I think most of you have it. There's still a lot of loose leaves. Was it a lot cheaper? How much was your textbook in the Cengage code? There's probably some used ones floating around.
They said they have any down there.
Usually, I don't really even order any books for this class. Continuing, they carry a whole bunch of books. Now, do you have the e-book or loose leaf? Both? Do you have the hard copy, loose leaf? Do you have the hard copy? What do y'all have, hard copy?
E-book.
You have an e-book? You didn't have a book last year?
I had one, but I just went to.
Oh, we just read it for a semester. How about you guys? Okay, sure.
Yeah.
That's loose leaf book?
Well, the email was on this recent, so I had to do.
How about you, Carl?
Because I bought the textbook and it was in page, so I got several.
It doesn't matter what you have as long as you have a book. Now, there is one up in the library. I think it's still there. I put it on reserve last year. It should be in the library on reserve. If you don't have a book, or if you forget your book and you want to go to the library and do some work, what have you, but there is one available somewhere. I think last semester, some instructor loaned a student a book, and I guess the student assumed they could use it all semester. About mid-semester, then I think the instructor took the book away from him. We don't do that, so forth. But Devon, if you'll come to my office after class, I believe I have a loose leaf that I used last year, and since you're the only one that don't have a book, I'll be glad to loan it to you all semester.
Okay, thank you.
Okay? So even if I get mad at you, I won't take it back. All right? So that brings us up to accounting. And we're going to review just a little bit. Now we're going to try to cover 10 chapters this semester, 11 through 20. If we get behind, there's one of those last chapters I can knock off, probably 20. Okay? But hopefully we can cover all of it. But start your Cengage as soon as possible. Read chapter 11 as soon as possible. Chapter 11 is the only chapter you will ever have on payroll accounting. Medicare deduction and Social Security tax deduction, federal income tax and state income tax. But we're going to review just a little bit. And Brooke, I want to start with you. What is the accounting equation? And this is going to help our new student who had accounting one, she said 100 years ago. Assets equal liabilities plus what? All right. That's where we started at in chapter 1. That's the accounting equation. Assets is equal liabilities plus owner's equity. Amy, name me 5 assets a business might own.
Land, building, accounts receivable, equipment.
Keep going. One more. Somebody help her.
Supplies.
Supplies, merchandise inventory, automobiles, what have you. Like you said, equipment. Okay. Alicia, what do liabilities end with? What are all liabilities except maybe one end with? All right. Accounts payable, taxes payable, interest payable, except unearned. That's the one that does not end in a payable. Fraser, what is owner's equity? Anybody help him? Amy, what's owner's equity?
Owner's equity is what they own, it's what the worth of the value, the worth, is what I'm trying to
Now,
say.
owner's equity is also capital,
Capital, there we go.
all right? And capital is what the owner has invested in the business. 2 people own the business. That's the creditors and the owner, okay? Now, we add to owner's equity with revenue. That's a plus to owner's equity, and expenses is a minus to owner's equity. And the only other account we have is drawing. So we have 6 accounts in the accounting world. Those 6, that's it. I don't care if you take 15 accounting courses. That is the, all right? Now, some of the assets may get more complicated when you get up into advanced accounting and so on. Some complicated liabilities. All right, now which 3 of these, Devon, go on a balance sheet? On a balance sheet. Somebody help him. All right, these 3 go on a balance sheet. Assets, liabilities, owner's equity. It has to balance. And it's a day in time. Now, these 2 go on an income statement. Okay? And this one goes on a capital statement, owner's equity statement. Okay, so we reviewed those in chapter 1 and chapter 2. In chapter 2, we started making journal entries. We started learning about debits and credits. So, Carl Cooper, I want some normal balances. What is the balance of an asset account? Debit or credit? All right, debit. And a liability? Credit. And owner's equity? No, it's on the same side as the liability, so it's got to be a credit too. All right. Anybody, what's the normal balance for revenue? All right, and expense, which is a reverse, and drawing.
Debit,
All right, how many of them have a debit balance?
3,
How many has a credit balance?
3.
Okay, that was just some minor rules we covered back in chapter 2 and 3. All right, when the owner invests money into business, Marcus, can you remember a journal entry? Not Marcus, but Tony. I'll get right in a minute. All right. Marcus must not have found his biscuit this morning, so he's not here. Okay, Tony, if the owner invests money into business, which one of these 6 do I debit? And which one do I credit? Do what? All right, it would be an asset debit, but it would be cash, wouldn't it? With debit cash. Now, if the owner put 20,000 into business, we would credit the owner's capital. That'd be the journal entry we'd make. All right. We made a lot of journal entries, so we need to practice 2 or 3. RJ, how about we paid salary expense? What do I debit? What do I credit?
Yeah.
The what?
Correct, debit and salary expense,
Debit salary expense and credit
cash.
cash. Okay. Now that was just an entry to pay the bill, to pay salaries. Okay, Jeffrey, how about we earned $1,000 revenue? What do I debit?
Easier.
And what would I credit? All right, reverse that and you got it.
Awesome.
If I earned $1,000, I debit cash and I credit revenue, don't I? Fees earned, commissions earned, some kind of revenue. That brought us up through chapter 3. And in chapter 4, we started adjustments, adjusting entries. What items, anybody now, do we have to adjust? What items do we have to adjust? All right, depreciation is one of the 5 kinds of adjusting entries. All right, let's call that one number 1. We debit depreciation expense and we credit accumulated depreciation. We had a whole chapter on depreciation just before we left last semester. We had straight line method, double declining balance, and units of production. Okay, what is another adjusting entry? One of your first ones, I think, was prepaid. We prepay for supplies. We debit supplies and credit cash. Later on, we have to do an adjusting entry and debit supplies expense and credit supplies. We did an unearned. We did an unearned, and you know, somebody paid us rent in advance with debit cash and credit unearned rent, or magazine subscriptions in advance, or football tickets in advance, or airline tickets in advance. They debit cash and they credit unearned until they earn it. These are pretty much reverses. And then we had the accrued. we had the accrued or accrual expenses, and we had the accrued or accrual revenue. An accrued expense is like we debit tax expense and credit taxes payable. All right, accrued revenue is like we debit accounts receivable and credit revenue. Now, those were the 5 kinds of adjusting entries that led us through chapter 4. Now, chapter 5 started an old worksheet. And how many columns did that 10-column worksheet have on it? Hey, I got my temporary teeth so I could smile now. Temporary. I've got the post drilled and put in for the permanent implants. But it takes about 3 months for those posts to mold to your bone before they'll put on the permanent teeth. So, but at least I don't have a gap. All right. We did a lot last semester. We went to that worksheet, and it was just to help us make adjusting entries and do an adjusted trial balance. Up through chapter 4, we had an unadjusted trial balance. Chapter 5, we did an adjusted trial balance. Well, what accounts does a trial balance have on it? It has all 6, don't it? And that trial balance has to equal debits and credits, don't it? If it don't, you made a mistake. And we talked about how to find mistakes with transposing or sliding errors. All right. From there, we went into retailing. We had some special journals that I didn't spend a lot of time on. The revenue journal, the purchase journal, cash receipts journal, and the cash payments journal, and a general journal. 5 journals. That's we did that mainly for a retail business. Somewhere around chapter 6, maybe went into chapter 7. And if you got a good computer program, all you need to know, if you got a good computer program, even QuickBooks Pro, is what you debit, what you credit. And that program will post for you. You may have to type into that program, debit, cash, and credit, John Doe Investment. Then that computer program will do your balance sheet anytime you want it to, or an income statement any day you want it to. Most wait to the end of the month. So computers makes us work smarter, not harder. And that's what a college degree is supposed to do for you also. Make you work smarter and not harder. I believe Amy may be the best example of that. She's going to work smarter and not harder. She used to say she was the grub.
The grunt.
The grunt, not the grub.
The grunt.
I was close.
You were close this time, yes.
All right. Since the grunt, she had to do all the dirty work or the harder work or whatever. So she decided to get a degree. Amy, you'll graduate this year or next?
Next.
Next year. Okay. And Alicia here is a science major. What do you want to go into with a science degree? Pharmacy school. So she wants to be a pill counter. All right. Okay. Pharmacists make good salaries, and it can be an interesting job. A lot of people need accounts and states, so it can be interesting. Not just count pills, you can get the grunts to count the pills. It's what my pharmacist does. He never counts pills. The grunts do. Fine. Alright, Carl Cooper, what do you major in, Carl, management? Martin. He wants to go back to the Bahamas, where he's from, and market vacations for over there, cruises. Something like that, Carl. All right. Trial balance, must balance. And from that trial balance, you can do your balance sheet, your income statement, and your capital statement. And you can do adjusted entries, and you can do closing entries. Now that's another point around chapter 6 or 7. What items do we make a closing entry for? What do we close out? Revenue, expenses, and drawing. Because those are temporary accounts. Temporary accounts is all they are. We want them to have zero balances when we start a new accounting period, whether it's next month or next year. And your balance sheet accounts, see, this is your income statement and your capital statement. Your balance sheet accounts, assets, liabilities, and capital, are your permanent accounts. You always want to have assets. Hopefully you'd have zero in most of your liabilities, and hopefully you have a positive balance in your capital account. But now some of you, you've got a car that's worth $4,000, but you owe $5,000 on it. That's bad news, isn't it? You've got negative capital in the automobile if you owe more for it than what it's worth. We don't want that to happen. When you got negative equity, that's when you go bankrupt. All right. Now, when we got through with the worksheet and making all the statements and doing adjusting and closing entries, we had completed the accounting cycle. And then we covered a little bit of retail accounting. All right, and then we looked at a bank reconciliation. Bank reconciliation. Probably all of you have a checking account. Some of you don't do bank reconciliation. I hope you don't wander through the month taking out money through ATM and don't keep up with your balance. You have a bank account. Do you do a bank reconciliation? Each month? You check your balance so to make sure it's right. Banks have made mistakes too, you know. Well, they may put some charge on there for an overdrawn check or something that you need to deduct from your cash on hand. All right, so we practiced bank reconciliations. From there, we went to notes receivable, somewhere around chapter 8. And what would be the interest on $8,000 at 10% for 90 days? Work that out real quick. Always remember to try to bring a calculator with you. You can use your cell phones for calculators, but not on a test. Last semester, I don't know how it happened, I was in class all the time. I don't think you had your cell phones out, you weren't supposed to. But I had 3 students who made the same grade and missed the same question on multiple statement. That is possible. That they studied together and missed the same thing. It's also possible they had some kind of miscommunication through cell phones. Okay? And we can't let that happen. It did happen, it won't happen again. Okay? All right, anyway, what's your answer on this little problem? Says you didn't even need a calculator. 10% of 8,000 is 800. 90, we use a rounded year, 360. 90 over 360 is 1/4. What is 1/4 of 800? What's $200? You didn't need a calculator for that, did you?
Yes, I did.
All right. We did notes receivable. We didn't get into discounting notes receivable. Then we got into chapter 9, which was inventory. And we had LIFO and FIFO. We had average. We had a retail method. And we had gross profit method. And we had lower of cost, or market. And then we had the exact inventory, which was specific. All right, we studied these, so we won't study them again. Now, chapter 10, we went into depreciation. One depreciation question here for you. Let me give you the cost of $50,000, scrap value of $5,000, and the life in years is equal to 10, and the life in units is equal to 100,000 units. What would be my depreciation for year 1 and 2 using 3 methods? Straight line, double declining balance, and units of production. Give me 6 answers. Take a minute and see if you remember. Don't have a calculator, just do it manual. I know all of you have pencil and paper. You're in a sophomore college class. Do you remember any of these concepts?
Probably.
Okay, let's do the straight line first. Does anybody have an answer for year one, straight line?
4,500.
How about year two, Fraser?
4,500 again.
Yeah, same thing every year, isn't it? Now, he did that by taking cost minus scrap. That would leave 45,000 over the life in years. 10 into 45,000 is 4,500. That easy. Now that was straight line depreciation. Now let's find, you can't find units of depreciation. Let's do double declining balance first. We don't take out any scrap for declining balance. We start off with 50,000 and multiply it by what? What percent? 10 years is what rate per year?
10%.
Double that.
So it's 10,000.
No, double that. 10% double. That's why it's called double declining balance. So now what is your depreciation for the first year?
10,000.
10,000? Okay. All right. Now we take the book value, 40,000, times 20%, and what's your depreciation for the second year?
8.
All right. Now, to do declining, to do units, the life in units I said was 100,000 units. But I've got to give you how many units was used in year one or two before you can work that. Let's say in year one, we produced 8,000 units, and in year two, 12,000 units. We've got to multiply those by something. Take a second and attempt that. All right, you take out the scrap value and it leaves $45,000. You divide that by the units of 100,000, and that's how much per unit. What's 100 into 45,000? Is that 45 cents a unit?
Yeah.
Then 45 cents a unit times 8 would be what? How much?
3,600.
That'd be your first year depreciation. And then 4,500 times 12, that 54?
Yeah.
See, I knew 12 was 1.5 times 8. And I was just trying to take half of 36, 1,800 and add it to it. That's one of my shortcuts. But anyway, don't practice my shortcuts. Okay. So, I didn't open a book to review those chapters with you. I wish you could remember what was in those chapters as well as I do. But I don't expect that. Because I've taught this course many, too many times. All right? And I'm going to tell you what's in every chapter without opening a book. Anyhow, I don't expect y'all to do that. But I do hope a lot of that, you knew it, you remembered it. Now, Semester 2 doesn't have a whole lot to do with semester 1. Just if you know journal entries, and if you know your debits and credits, and if you know the statements, those will always go in every accounting class. But semester 2 starts off with payroll. Now, how many of you are working full-time or part-time? Amy, you're not working part-time? Not at all. All right, none of you guys in the back work part-time, student work or anything? Okay, well, if you're not working part-time, guys, I expect no less than an A average in accounting this semester, because you got plenty of time. Stay off of those video games, okay? All right, opportunity cost. That's something you give up for something else. We talked about that last semester. And it's a trade-off. Do I study or do I sleep? Okay? How many of you watched that Clemson LSU ball game all the way to the end? That kept you up a spell, didn't it? I stayed up at 1 o'clock myself the game and then watching the recap and all of that. But anyhow, that's a trade-off. I gave up sleep to watch that ball game. And had nothing to do with the results. I wasn't there. All right. Anyway, the ball game, Clemson played the first quarter real well. And LSU took over in the second quarter. Then they played about equal the last half, I guess. But anyhow, the LSU, I think, scored one more than Clemson in the second half. All right, now payroll. The reason I asked you, do you work? What are some things you have deducted from your payroll check?
Federal taxes,
The what?
income tax, state tax.
Federal income tax, right?
Social Security,
Social Security tax.
insurance,
All right. Any other kind of taxes? We have FIT, which is federal income tax.
state income tax,
We have SIT, which is state income tax. Now we have FICA, which you mentioned. That's broke down into Medicare and Social Security. All right. The government believes if you didn't have to pay this in, you wouldn't save it, you'd end up on welfare, being sponsored by the city or state. Here, this is sponsored by the federal government. Now, that's the 3 or 4 taxes. Now, Social Security, I think, is 6.2. Medicare is 1.45. That makes your total Social Security of 7.65. Federal income tax, the brackets have changed, but you could be paying up as much as 35%. State income tax in West Virginia is over 5%. So you see, if you make enough money, you may be paying out about half of it in taxes. And then you've got to pay property tax. You pay luxury tax if you smoke or drink. You pay excise tax on tires, which you don't know it's just built in. You pay a whole lot of taxes at the gas pump. You pay real estate tax and personal property tax. And you even have to pay sales tax on your coffin. So we're taxed on something as long as we live, or work, or have anything. Okay, but these are the main taxes. Now somebody else mentioned insurance is deducted from your paycheck. What else might be deducted from your paycheck?
401k.
All right. some kind of retirement plan, 401k. Now my retirement plan here at Bluefield State, I put in 6% of my salary, and the state of West Virginia matches 6%. So 12% of my salary goes into the stock market. It's called TIA Credit, and it can really grow. Some professors have retired with over $1 million in their profit sharing plan. They've been here a long time, that would work. Now the state of Virginia worked different. We had to pay in 5.5%, and they paid in 5.5%. Later, they started paying in the whole 11%. And the state of West Virginia, it's based on the number of years. That's one reason I retired from the community college. They gave us 6 years that year to retire. And 6 years meant $400 a month for the rest of my life extra on my retirement paycheck. And that's why I took it, and so forth. But, and then they paid most of my health insurance. They paid all but maybe $100 a month, and so on. So when I leave here, I'll have the retirement in West Virginia. So this Social Security don't depend on that being able to give you a very good life when you retire. Now, how many of you have grandparents on Social Security? Do you know how much they draw, Amy?
I know how much my mom draws, but I don't know how much my grandma draws.
Okay, your mom's on Social Security. And how much she draws? Is that private, or can you tell?
About, well, she's drawing my dad's, off of my dad's right now, because she retired early, my dad passed away.
Right.
So she's drawing $1,500 a month.
Okay. Now, $1,500 a month. You're not going to take many cruises on that kind of retirement, are you? It would take 4 months of her salary, or 3 months, to take a cruise. So hopefully, and we won't go any further with it, hopefully she's got some other supplements, retirement from your dad or what have you. So you need a supplement to that Social Security. $1,500-1,600 is probably the average in West Virginia. Some states average a little higher on drawing Social Security. I guess it goes up to $2,200-2,300. But depends what kind of life you want when you're old. What else do you have deducted besides 401k and insurance? Anything else? Some places they take out for donation to United Way. Some colleges take out for the foundation if you want to donate to the foundation. Bluefield State furnishes a life insurance. Life insurance up here is a squeaky little $5,000 if you die. That's squeaky. If you want more, you have it taken out of your paycheck. If you want disability, you have it taken out of your paycheck. Or if you want long-term care, all of that. Now, the community college gave you 2.5 times your salary. My life insurance at the community college was way over $100,000. But up here, it's different. So lots of things can be deducted from your payroll check. Hopefully nobody gets paid in cash. So what I want you to do is read this chapter well and come back, and we'll get into chapter 11 real heavy. It's not a hard chapter. And then we'll take you from there. Now, there's going to be 2 or 3 hard chapters, folks. One's on corporations, one is on bonds. So your second test is going to be tough. So try to do well on this first test. And then your last chapter will get a little bit easier. Now each chapter in this second semester stands alone. You don't need chapter 1 and 2 to do 3. You don't need chapter 11 to do 12. But there's 3 chapters that pretty well go together. Corporations and bonds. And another one invested in another corporation. So 2 of those chapters go together. Other than that, they all stand alone. So you're getting out early today, the only day, so I'll see you Thursday. Now remember, you signed up for this twice. Now, I didn't have any trouble last semester with the 10. All of you okay, good. So I believe in the college manual or somewhere, we're supposed to drop if you miss 2 or 3 days. Is it 3?
Yeah, 3.
Now, I don't know, was that the same from Monday, Wednesday, Friday, or Tuesday, Thursday? Well, I would give you benefit of that, I'd at least do 3, yeah. If I didn't hear from you in 3 days, I'm supposed to drop it, okay? But that won't happen, all you all want to finish, I'll see you on Thursday.